closer to the closing bell on Wall Street. Now's the time to do the deal. But look at the market. It is starting to fall quite sharply within that last hour. It's been down all day. I don't think the Dow truly shows the magnitude of the day. Look at FANG and you see all off by 2.5% for Amazon, which is really being hit hard. The Netflix down 3%. And these are the reasons why. The drivers of the day. The talk of new tariffs on China. The White House says an announcement's coming soon. The biggest losses in tech. I'll speak to the head of the IT Industry Council about why it's being hit so hard. And we need to get into Amazon, which is among the worst of the lot. An investigation now at Amazon over data leaks. Live from the world's financial capital, New York City. It's Monday. It's September the 17th. I'm Richard Quest. I mean business. Good evening. Tonight, there is a massive escalation in the trade war looming, and it could hit as early as tonight. The United States is reportedly readying tariffs on a further $200 billion worth of Chinese goods. And you've seen the reaction in the markets. The Trump administration's top economic advisor says the president isn't satisfied with the progress so far in the Chinese trade talks.
It is a grand strategy of negotiating. It is President Trump's brand and style. He's tough. He's laid out his goals. I think they're very sensible. As I say, it is a free trade strategy, but it's hard to make the reforms. So whether they're long-term or not, I think they're necessary, and we'll see.
Let's cut through the war of words and let's look at exactly what's been imposed. What is the situation? Now, the year started with the US imposing tariffs on Chinese steel, aluminium, washing machines, and solar panels. China responded with its own tariffs on $3 billion worth of US goods. It was pretty much even Stevens in terms of value tariffed. But then as it escalated, each move was matched by the other. The US was targeting China's tech industry, $34 billion. China targeted American farming. And then by the end of the summer, phase 2 kicked in. Phase 2 was $16 billion worth targeted against each other. Now, this is the situation so far. These are the tariffs that are in place at the moment. But look, it pales into insignificance compared to what could be at stake. $200 billion worth of Chinese goods. And remember, the president has, the US president, that is, has also asked his trade representative to look at increasing the rate of tariff that would be on that to much higher levels. Dean Garfield is the president and chief executive of the Information Technology Industry Council. Good to see you, sir.
Good to see you as well.
The $200 billion that we're told an announcement is on its way, that's extremely worrying for your members.
Yeah, absolutely. When you get to a number as high as 200 billion, it's hard to think of any product or a service for that matter that wouldn't be impacted. It would actually undermine America's leadership in technology and counterproductively end up helping Chinese companies.
The administration, you heard Larry Kudlow, the economic advisor, the administration believes that this is the only way to get China to a level playing field, and if they won't come, then the tariffs themselves will level it out. Why are they wrong?
They're both wrong and right. They're right that China has abused the privilege of belonging to the World Trade Organization. The Chinese market is neither reciprocal or fair. Where they're wrong is that tariffs will be the tool and the broader strategy for getting China to change. I was in China last week. They're not moved by these tariffs. They're ready for a long-term fight. And so what would actually work and what's needed here is for both parties to get back to the negotiating table with a defined set of achievable objectives and metrics for measuring whether those objectives are being advanced.
Okay, you say, but of course, the administration says, look, we've been talking to China for years. They talk and they don't actually make any significant reforms. And, you know, it's carrot and stick, and at the moment it seems like the whip will be imposed as well. Where do you fear this will end?
Where I fear it will end is actually just an escalation in the tariffs themselves and undermining the bilateral relationship for the long term, and more importantly, undermining America's leadership around innovation. The tariffs, and a lot of people are now writing about this, are actually creating incentives and motivating the Chinese to have greater access to other markets, because ultimately the tariffs are a tax, which end up being a tax on American products. And so it is true that we've been talking, the United States has been talking for years, but the administration has the opportunity to not only talk, but to create metrics for measuring whether that talk and conversation is resulting in anything meaningful. They should do that.
Right, well, while we were talking, it is confirmed. The president has said that there will be an announcement, or we're expecting an announcement after the market closes. So we can see the reaction.
That's unfortunate.
Yeah, it is. Well, you say it's unfortunate. We can see the reaction. The market is now, I mean, it's lost some ground. That's what explains the sharp fall just before 3 o'clock. What can you do, though? I mean, I don't want to sound disrespectful, and I put it in the same terms to other lobbyists or those who have vested interests, but the administration's not listening to you.
Yeah, well, the thing that we're doing is speaking in terms that the administration understands, which is twofold. One, American leadership, which I've been talking about, but also second, in politics, really. And so that's why we're a part of a broader campaign aimed at persuading the president through getting people in the states that made the difference for the president to share with the president why this is, in fact, quite harmful.
Good to see you, so thank you. Please come back as this develops over the next few weeks and few months, because I think you and I could probably both agree that it's not going anywhere quickly. It's going to get a lot. Do you think it's going to get worse before it gets better?
Yes. Having been in China last week, I think it'll absolutely get worse before it gets better.
Good to see you, sir. Thank you. U.S. stocks seesawing throughout the course of the day. You saw on the big board, I mean, that bit of smidgen of green, it looks a long time ago, it was just before 11 o'clock. And we have these two sharp falls. You know, one never wants to forecast what the market will do on any given moment or any given second, but it does suggest that there is a selling purge coming into the market on the back of what we've heard. If you look at this sharp fall at 1:30, then a minor recovery, and then a sharp fall again towards just before 3 o'clock. We'll watch it closely. One of the advantages of Cresswell's business now being in this hour earlier allows us to follow these final moments of trade in much more detail. One of the things we've been watching, of course, and suffering is the growing global debt, which continues to rise at an alarming rate. And it's a worry for the billionaire investor Ray Dalio. He uses algorithms to work out economic cycles and says it's a matter of when, not if, that the next financial crisis is coming, which is very appropriate as we remember 10 years since Lehman, AIG, and the great financial crisis. Dalio has published a template. I've got a copy of it, I'll show you in a moment, spelling it out, and says when it comes to trade, the world is inextricably linked.
The world trade linkages, where something's produced here and exported there and all of those other things, is very, very complicated, right? And so we try to do calculations. So we know who exports what to where, and we do this on computers and so on. But still, when you think of the knock-on effects, it's very difficult.
Are you concerned at the level of debt that's now being generated by within the United States, and particularly by the US government, where Treasury receipts are very sharply down while government spending is up?
Yes, if you look at the various segments of the economy, the corporate sector, the household sector, and so on, the sector that stands out is the U.S. federal debt. And we're going to have to sell a lot of bonds, probably more bonds to the rest of the world than we can absorb in those bonds. And so that becomes an issue. We are in the wonderful position of having the world's leading reserve currency. So we don't have to borrow in our currency. And as a result, we don't have to borrow in foreign currency. And as a result of being in that privileged position, sometimes we abuse that privilege. And that abuse of that privilege in terms of the debt can, I think, and one day will, put us in a situation where they have too much debt, too much dollar-denominated debt. A debt in dollars means a promise to deliver a lot of dollars that we will then have to produce and service. And one day that's going to cause, I believe, a significant appreciation in the value of the dollar. And at its worst, it can threaten our reserve currency status. So it's something that if I was to look out 2 years, roughly in 2 years, we'll see some of the fiscal stimulation that we're seeing now fade. And we're going to see more needs to sell that, which is going to be problematic, I think.
Are you, again, nothing like 2000, I'm trying not to be apocalyptic in all of this, but are you being a canary in the mine at the moment and saying, hang on, I'm seeing things in the federal debt that I don't like?
Yes, but what I do, my job is to be very practical. I'm in the markets, and I've got to do these calculations, and that's basically all it is. And so when I do those calculations, let's say out 5 years and so on, I see that in something like, I don't know, 2 or 3 years, we will be in a different part of the cycle. We're 9 years into the expansion. Well, I think we're like in the 7th inning. We have a little bit more to go, and then and I do those pro forma financials. And if I'm looking something like 2 years forward, I have concerns about the things that we're talking about.
Ray Dalio, and this is the book, A Template for Understanding Big Debt Crises. It's a lot easier perhaps to read than it looks. And interestingly, it's being given away free. You can get a PDF copy of it. You can also pay and buy the actual book, but they are making it available as a sort of as a public good. It's available as a PDF copy. Now, Amazon says it's investigating claims that its employees are leaking internal data to help sellers get higher rankings on its website. That's what Amazon's share price is doing. It's down 2% at the moment, nearly 3%. It all follows a report that claimed Amazon staff took bribes to delete negative product reviews and sold confidential customer information to merchants. It's particularly bad in China, apparently. Samuel Burke is with me. Samuel.
Richard, data for bribes, and this is quite a simple story to understand, which I think is why investors are nervous, because any Amazon user could understand if vendors are getting confidential data to try and improve their position in the Amazon search results, which is so crucial to them, and if negative reviews are being deleted. I mean, this is part of the fundamental trust that users have in the Amazon platform. Now, Amazon says they're investigating, and I just want to put up on the screen what a spokeswoman is telling us about this investigation. Quote, "We hold our employees to a high ethical standard," she tells us, "and anyone in violation of our codes faces discipline, including termination and potential legal and criminal penalties." I think, Richard, what this really highlights for us, two things. Number one, we always think about Amazon and its relationship with the United States, Western countries, but there's this whole part of the business that is China-facing. So this gives us some insight into that. And secondly, it shows just how important Amazon is to so many vendors. Some of these companies, Richard, only exist because of Amazon. So it shows that they may go to these incredible lengths to try and get every last advantage they can, because literally their whole business might be on this platform.
So does Amazon look like it's got a handle on this?
It looks like they have a handle on this, but I'm thinking of stocks like Yelp, which I've followed for years. This is the restaurant review app. This is a stock that once traded at $100 and is now below $50 for various reasons. But one of the main reasons is people could never trust it after it was revealed that the reviews were being manipulated by a whole host of factors and players. So this is really, really key to the Amazon platform. If people can't trust what they're seeing, they're not going to use the platform.
Samuel, thank you. Keep watching that one. That's got legs. Thank you. Now, let me just show you where the FANG stocks are as we are in the last hour of trading. We showed you Amazon's off nearly 3%, but Facebook is also down 1%. Netflix is being very hard hit today. It's down 3.25%, whilst Google is off just 1%. I say just. But those are the reasons that the NASDAQ is down more than 1% and bringing the broader market down with it. When we return, forget Hearst and Pulitzer. Now Bezos and Benioff are taking control of America's front pages. They are the Silicon Valley newspaper tycoons. And last week, we had the IPO of the potential Tesla rival NIO. Today, Saudi Arabia is pumping $1 billion into another electric car contender. I shall be as lucid as possible after the break. Lucid's the name of the company.